sharing profits and losses in the ratio of 2:1, and they now admit C in their firm. On the date of C's admission, balance sheet of firm of A and B was as given here. Terms of C's admission are as under: C is to bring in capital of rupees 50,000 for 1/6 share in profits, apart from his share in goodwill of the firm. And firm's goodwill has been given to us here in point number 6. With C's admission, B's profit share increases to 7/12. Means after B's admission, the new profit share of B is 7/12. Right, guys? We know that new partner always gains. So gain of C is the share that has been given to him, that is 1/6. So this is C's gain or C's profit share, that is 1/6 given to us here. B's gain is, now here it says that B's profit share increases to 7/12. Means after change in profit share, it has become 7/12 for B and it has increased. It means the profit share what B was getting earlier was lesser than this amount. So his gain would be what he is getting now minus what he was getting earlier, which was 1/3. Correct, guys, or not?
Yes.
Yes, sir.
Yes.
I hope you all have understood this, right, guys?
Yes, sir.
Just a second, guys. So B's gain is 7/12. Okay, I cannot write this in the form of as 3/25 is mentioned here. So his new share minus old share will give us B's gain. New share is 7/12. Old share is 1/3. LCM of 12 and 3 is 12. So this 12 divided by this 12 is 1. 1 into 7 is 7. So here we will have 7 minus 12 divided by 3 is 4. And 4 into 1 is 4. So here we will have 7 minus 4 divided by 12. That is 3/12. Have you all understood the calculations here, including Akshita?
Yes.
Yes,
Yes.
sir.
Harsh, have you understood it? Harsh and
Yes,
Abir?
sir.
Abir, I have asked you also. Have you understood the calculations here?
Sir, I am a bit confused in this one. Actually, I added the old ratio with the new one, assuming that this much amount is increased of B.
No, it is saying increases to 7/12. Means after increase it became 7/12. It does not say increases by 7/12. So you have to be very particular about the language. I hope you have understood. The statement here says increases to 7 by 12 and not increases by 7 by 12. Am I clear?
Yes, sir.
So A's sacrifice would be how much? Total gain, that is gain of C plus gain of B. Yes or no, guys?
Yes, sir.
We know
Yes,
that total sacrifice is equal to
Yes.
total gain. Since both these partners have gained, it means the only remaining partner A is sacrificing, and his sacrifice would be equal to total gain. That is gain of B plus gain of C. Here LCM of 6 and 12 is 12. 12 divided by 6 is 2. 2 into 1 is 2. Plus 12 divided by 12 is 1. 1 into 3 is 3. So sacrifice of A is 5 by 12. Right, guys? I
Yes,
hope
sir.
so far everything is clear to you all.
yes, sir.
Good.
Yes.
The share in goodwill of the firm is goodwill of the firm multiplied with C's profit share, which is 1 by 6, that is 4,000. Right? So now, guys, we will pass journal entries. The first journal entry would be for the cash brought in by C for his capital and also for goodwill, for his share in goodwill of the firm, for which we credit premium for goodwill account. So he has brought in cash of rupees 50,000 for his capital plus 4,000 for his share in goodwill of the firm. So total cash brought in by C is 54,000. I am not writing the narration now, guys. You know what narration you should write for these entries. The second entry would be premium for goodwill account debit. Okay. After writing this, what should I write here, guys?
Two A's capital.
B's capital.
B's
B's
capital.
capital.
Debit.
Sorry, debit. Akshita, what do you say? Akshita, I'm asking you, what should I write here?
Two B's capital, sir.
Sorry,
Two B's capital.
why B's capital would be credited? We
Because
credit
he's
here
the
which
gaining part.
we credit here which partner's capital, the one who sacrifices. But B is gaining, so we will debit B's capital account and will credit the only sacrificing partner, that is A's capital account. So premium for
So
goodwill
in this,
account, yeah,
we are giving the premium for goodwill, which C is bringing in, that to the gaining partners, right, sir?
yeah, that we are giving to the sacrificing partner. But sacrificing partner will not receive only from C, he will also receive from B because he has also sacrificed towards B. The total sacrifice of A is 5 by 12, out of which 3 by 12 he has sacrificed towards B, and remaining 2 by 12. 2 by 12 is equal to 1 by 6. So that he has sacrificed towards C. So both C and B will compensate to A. Am I clear now, Akshita?
No, sir, I understand.
See, this part I explained initially, if you remember, in this chapter only, in admission chapter, that all the gaining partners sacrifice to the, sorry, compensate to the sacrificing partner. This point for newly valued goodwill. This entry, premium for goodwill account debit, gaining partners capital or current account debit, to sacrificing partners capital or current account. Right? You all have noted down this in your notebooks. So here we are debiting the premium for goodwill brought in by the new partner. Here we are debiting new partner's capital or current account for the amount of goodwill which he could not bring. But we are also debiting here capital of one of the old partners who is also gaining, other than the new partner. You see this question, this example. A and B were sharing profits and losses in 3:2. C is admitted for 1 by 5 share in profits. After C's admission, A and B will share profits in the ratio of 2:3. So here A's new share is 8 by 25, B's new share is 12 by 25. So here A is sacrificing 7 by 25 and B is gaining 2 by 25. It means other than C, B is also gaining here. So what did we do for this? We debited premium for goodwill account for the amount of goodwill brought in by C, but we also debited B's capital account because B is also gaining other than C. Right, Akshita?
Yes, sir.
Right, Falak? Abir, I hope you all are understanding this, right? We have already seen this with some examples.
Yes, sir.
B's capital account would be debited with goodwill of the firm multiplied with B's respective gain. And gain of B is how much? 3 by 12. So this gives us amount of 6,000. Same way, A's capital would be created with goodwill of the firm multiplied with A's sacrifice, which is 5 by 12. And that is 10,000. So this all guys we have already seen earlier. Here also we did the same thing in example number 12, which you already have in your notebook. Goodwill of the firm was 20,000. It is given here. Goodwill of the firm on the date of C's admission is determined at rupees 20,000. So we took here goodwill of the firm multiplied with A's sacrifice. And A's sacrifice was 7 by 25. For debiting B's capital current account, we again took goodwill of the firm multiplied with B's gain. And B's gain is 2 by 25. So guys, you may not understand any question which I give you an assignment only when you do not revise the notes you already have with you. I am not doing anything new here, which you do not know, which has not been taught to you. It has already been taught. It has already been explained. Have you got this, everyone?
Yes, sir.
Yes.
So these two are the entries for admission of C for his bringing capital and cash for his share in goodwill of the firm and compensating to the sacrificing partner by the gaining partners. Right now, we will pass entries for revaluation of assets and liabilities. You know that the first entry usually that we pass as far as revaluation is concerned is for the losses in the value of assets and liabilities. Building is to be appreciated, so here we do not have loss, but we have gain. Market value of investment is 3,000. The book value is 5,000. So there is a loss of 2,000, but to absorb this loss, we have adequate amount of IFR. So we do not need to take this loss to revaluation account at all. Now this is a loss. There are bad debts of 1100. For this, we will credit, that is, we will decrease our debtors by 1100. So to debtors account with 1100. Then estimated liability for workman combination is 7,000. We also have WCR reserve with us, but amount of reserve is 6,000, whereas estimated liability is 7,000. So estimated liability of 6,000 can be created out of this reserve. And for another 1,000, we need to debit revaluation account. So we will debit here to provision for workman compensation account with 1,000. That's it. As far as loss is concerned, loss upon revaluation is concerned, we will have only these two things. So revaluation account would be debited with 2,100. Now in the next entry, we will record all the profits upon revaluation of assets and liabilities. So we have profit in the value of building, which is to be appreciated to 115%. Means what should be the book value of building that has to be taken up to 115% of its book value. It means the actual appreciation in the value of building is 15%, and 15% of 80,000 is 12,000 rupees. So by 12,000 we need to increase the value of building. Here also, Abir, we have 2 here, appreciated to 115% and not appreciated by 115%. So we have to bring up the book value of building so that it could become 115% of its book value now. That is 115% of 80,000. And 115% of 80,000 is 92,000 rupees. It means we need to increase building only by 12,000. I hope guys you all have understood this point about to and by. Yes or no?
Yes.
Yes, sir.
Abir, Harsh, Falak, have you understood this?
Yes, sir.
Yes, sir. Yes, sir.
Guys, then please say yes immediately when I ask you, right? You know that we have lot many things to cover and we have less time. So this was one of the profits. Now, since we have booked bad debts of 1100, it means now we do not need these provisions because this bad debts we have already recorded by crediting daters. So we will reverse the provision, means we will decrease the provision by 1500, and that is again our profit or gain. So for that we will debit provision for doubtful debts account by 1500 rupees. Right? We do not have any other profit here. So now we will credit revaluation account.
Sir, this we should credit provision for doubtful debts by 1100.
Amount of provision is 1500. So
But
we will decrease provision by 1500 only.
uh, but the we have realized the bad debt still 1100.
No, we have not realized. We got to know that there is actual loss of 1100. We will not receive this 1100 for sure. So for that we have already decreased our daters by creating them. And we made this provision earlier for such bad debts only. Since that bad debts has already been taken care of here, now we do not need provision for doubtful debts anymore. Provision for doubtful debts had credit balance in our books, so now we will debit it with 1500. This is what I explained in my classes. If you check your notes, you will find that provision is reversed with its book value and it has nothing to do with the amount of bad debts. Should I show that as well here? There are bad debts of 3500. So we decreased our daters by 3500. And after that, what did we do? We reversed our PFDD by its book value, that is 2000. This was example number 14. Have you got this, Habir?
Yes.
Guys, you should not mug up the things. You should be always good with your concepts. Since we have already recorded the bed debts given here, we do not need PFDD anymore because question does not say anything about PFDD at all. Here question does not say anything about PFDD. So since we have already recorded bed debts, we do not need this and that is why we will debit it with its book value. Right? This is what you were doing in class 11th as well. You were reversing previous year's PFDD. How? You were subtracting it from current year's bad debts and current year's provision for doubtful debts. The same we are doing here. The presentation, the journal entries are different. That's it. But the effect is same. So with this, total amount of profit is 13,500. Total amount of loss upon revaluation is 2,100. So it means there is a net profit of 13,500 minus 2,100, that is 11,400. And for that, we will debit revaluation account and will credit old partners' capital accounts. Total profit is how much? 11,400. That is 13,500 minus 2,100. And this will go to old partners' capitals in their old ratio, that is 2 is to 1. This is the old ratio of partners, 2 is to 1. So 11,400 into 2 by 3 will go to A. 3,800 into 2 is 7,600. So this is the share of A in revaluation profit. And half of this is 3,800 is the share of B. Am I clear, guys? Now investment fluctuation reserve would be used to absorb the loss in the value of investments, and that is 2,000. So for that, we will debit IFR and will credit investments account by 2,000. And for this, for creation of this liability with the amount of 6,000, because liability for 1,000 we have already created here. So we need to create liability for workman compensation only for rupees 6,000, for which we will use the entire reserve. So the entry would be workman compensation reserve account debit to provision for workman compensation account with 6,000. Have you got this, guys, or not?
Yes. Yes, sir.
Abir, Harsh, Akshita, are you understanding everything? Or you have any question, any
Yes, sir.
doubt so far?
Yes, sir.
Sir, I've made separate entries of uh, the above, like in the above, which profit and losses we have made combined entry. I've made separate of each.
Like here, you have passed two entries,
Yeah, uh, and
and here
and in
also.
the yes, sir, I've combined like revaluation account debit to workman compensation reserve debit to provision for workman compensation.
And in that, you did not debit, you did not credit debtors account.
No,
No, you should do that as well. You debited revaluation account, you are saying, and then you created provision for workman compensation, and what more? And
sir,
here you also
debit.
debited workman compensation reserve account, right?
Yes, so I made 7,000 entry separate.
No, no, please do not do that. See, if you are absolutely comfortable and confident with such entries, okay, you go ahead. But if you're not, then you are more likely to commit errors in exam. So better you pass revaluation entries together. For all the losses, only one revaluation entry in which you should not include any reserve. Then one entry for all the profits or gains upon revaluation. then distribution of profit or loss among the old partners, and then for each of the reserves you pass separate entries. This is my advice, but yeah, if you're, as I said, if you're comfortable and confident about what you have done, okay, go ahead with that, right?
Okay, sir.
So, guys, after passing these two entries, now we do not have anything left in WCR account because WCR account had credit balance of 6,000, which we have fully used by debiting it to create liability for workman compensation. In IFR account, we had balance of 5,600, out of which we have utilized 2,000 to decrease the value of investments. So the balance left is in only one reserve, that is IFR, and that amount is 5,600 minus 2,000, that is 3,600. So that is a free amount of IFR. That should be distributed among the partners, among the old partners in their old ratio. But since in this question, partners have decided not to distribute accumulated profits, it means they want to keep IFR balance of 3,600 intact. And for that, the entry that we pass is gaining partners capital account debit to sacrificing partners capital accounts. You have to relog in, guys, immediately once the meeting gets over. Right? So I hope you all have understood about IFR, what I just explained. The remaining balance in IFR is 3,600, which we should not distribute among the old partners because they themselves have decided not to distribute it. So instead of distribution, we will compensate sacrificing partners, and that compensation would be given by the so sacrificing partners would be compensated by the gaining partners as far as IFR balance is concerned, proportionate to their respective gain and sacrifice. So who is gaining here are B and C. So B's capital account would be debited. C's capital account would also be debited to sacrificing partner, that is A's capital account. With how much? With the balance in accumulated profits or IFR account multiplied with respective gain. And gain of B is 3 by 12. Gain of C is 1 by 6. So 3,600 into 3 by 12 is 900, and 3,600 into gain of C, that is 1 by 6, is 600. And here 3,600 into respective sacrifice of A, and that sacrifice is 5 by 12. So 3,600 into 5 by 12, and that is 1,500. Gaining partners compensated sacrificing partner for undistributed balance in IFR account in proportion to their respective gains and sacrifice. And these are respective gains and sacrifice. Have you understood, guys? All the journal entries.
Yes, sir.
So, guys, start noting it down from here. This was exercise 6 of assignment 11. Guys, these are working notes. You must write here working notes. So, guys, after this, we have to prepare revaluation account and partners capital account and balance sheet of the new firm, right? You can also start making it yourself, guys. You know how to make revaluation account. You simply have to post the journal entries in which revaluation account is involved. In the first entry, we credited daters and debited revaluation account, and we also created provision for workman compensation account with 1000 rupees. And we created revaluation account for building and provision for doubtful debts account. Building was appreciated by 12,000 and provision for doubtful debts were cancelled out or reversed by 1500. So with this, total of credit side is 13,500. So here we have profit of 11,400, which will go to the old partners' capitals as 7,600 and 3,800 respectively. That is our this entry. Now partners' capital accounts. First, we will write the capital balances of A and B as given to us in the balance sheet. That is 60,000, 50,000 respectively. Now we will post those journal entries in which partners' capital accounts are involved. So in the first entry itself, C's capital account is getting created. So on the credit side of C's capital, we will write buy cash account with 50,000 rupees. Then in the second entry, A's capital is getting created. So on the credit side of A's capital, we'll write premium for goodwill account and B's capital account with their respective amounts, 6 and 4,000. This is how A's capital will get created with 10,000. Yeah, it was 4 and 6. Now on the debit side of B's capital account, we will write to A's capital account with 6,000 rupees to decrease capital of B. Have you understood the posting of entry number 2, guys? Here I have done the posting of journal entry number 2. I am asking, guys, have you all understood this posting?
Yes,
Yes.
sir.
Yes.
Yes.
Now in entry number 5, again partners' capitals are getting created. So on the credit side of A's and B's capital in particulars column, we will write buy revaluation account, and then we will write 7,600 and 3,800 respectively in capital columns of A and B. And after this, the next entry in which partners' capitals are involved are the eighth one. So on the debit side of B's capital and C's capital, we will write commonly to A's capital. And this will go in the debit side capital columns of A and B and C respectively. So here we will have again 2A's capital account with 900 and 600 respectively, these two amounts. And on the credit side of A's capital, we'll write by B's capital and by C's capital with their respective amounts. That's it, guys. We are done with capital accounts also. Now we will close it. For that, we will first have the total of the credit side. So here it is 76, 78, 500 and 79, 100. Here we have 53, 800. Here we have 50,000. So 79, 100 minus 0 is 79, 100. Then 53, 800 minus 6,900 is Uh, it would be how much? 47. So 46,900, and this would be 49,400. So now balance sheet. I am copying the balance sheet given in the question. Building has increased by 12,000, so now its book value would be 92. We have decreased the value of investment by 2,000, so it would be now 3,000. There is no change in stock. Provision has been reversed, so there won't be any provision at all. And we have decreased datas by 1100. So now the value of datas would be 8,100 minus 1100, that is 7,000. Cash in hand has increased by 23,000 plus 54,000 brought in by C, this one. So 23 plus 54 is 77,000. There's the new cash balance. Workman compensation reserve has gone off. Why? Because it has been used to make liability for workman compensation. Investment fluctuation reserve will have balance of 3,600 after adjusting the loss in the value of investments by 2,000. Creditors don't have any change. The new item here is provision for workman compensation, and that is of 7,000. And capitals of A is, guys, how come I missed partners capital accounts? Oh, okay. Yeah, so capital balance of A is 79,100, of B it is 46,900, and of C it is 49,400. So total of capital now is 110 and 1,50,000, 9,615 and 924, that is 1,74,500. So here we will have 174, 181, 192 and 195, and then 1100 means 196, 100. Here we have 95 and 18, that is 1,13,000, 1,20,000, 1,97,000. Okay, guys, I will check it as what is the problem here, why there is a difference of 900 rupees. We will
So,
find out for
uh,
sure. Yes, yes, Anna.
B's capital balance is 46,900.
Oh, okay, it is 46,900. I took here 46,000. So it will increase by 900, so it will become 75,400. Okay, so this also will become 97,000. Yes. Tell me, guys, have you understood this question now fully?
Yes, sir.
Abhi, Rakshita, Harsh?
Yes, sir.
Yes, sir.
Yes, sir.
Okay, so guys, I'm sending you a screenshot of revaluation account. You please note it down in your notebooks. Now only immediately after the class. And then go through this entire question and its solution thoroughly, guys. Yes, I have sent it to you. Right, guys, everyone? Falak, Ana, Abir, Akshita, Harsh, I hope you have understood what I said. You have to first note down revaluation account, partners capital accounts, and balance sheet in your notebook. Then you have to go through this entire question and its solution to make sure that you have understood everything. Right? All?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
Right, Harsh?
Yes, sir.